Hi everyone, and welcome back to another simple daily practice drill that I think you can use to become a better trader. And this one is about higher time frames and lower time frames. So let's go and check it out. Now, I did an earlier video on this showing the exercise for the drill, and I'll put the link here. And so if you haven't seen this video, quickly watching this will give you a lot more context for what I'm about to do. Drill instructions. In the first video, I took a concept from Dr. Al Brooks, which was talking about the relative strength of channels. If you have a bull channel on this time frame and you go up a time frame, that bull channel is probably a small pullback bull trend, a bull micro channel, or if it's really strong, a bull breakout. And so by changing time frames, we actually get an idea of what the larger structure is and where we are in that. So in this drill, I took that a step further, and that is I can look at any pattern on the chart from a higher time frame and see how it plays out on a lower time frame. And I'm going to show you how this works. Now, this is an exercise I do every single day. This was a really big factor in me developing my read of price action. In fact, if you practice it enough, you'll find that there's very little that can surprise you. Yeah, the bars can get very big. Reversals can be very strong. But this practice of constantly going up a time frame to see the structure that we're sitting in, you'll say to yourself, oh yeah, that makes sense. We should have broken up, but now we're clearly breaking below. You start to have a more relaxed view to trading. It'll bring the heart rate down. One of the things it did for me was stop me from very quickly jumping into the market, instead taking a step back, looking at where we are, seeing what the larger pattern is at play, and then trying to participate in that larger pattern. And this has really helped my swing trading. So let's get into it. So these are my actual notes from this morning. You can see I'm using Notion. It's just daily conditioning review, charts that I've screenshotted. I've got notes about them. So that's my actual homework that I did this morning. Now, usually it would be much longer, but I thought to myself, you know what? That's probably a really great idea for a video. If people started practicing this, they'll find that their trading improves a lot. Now, I'm going to include links to these in the blog, but let's do some on the video so you can see what I'm looking at. So let's take a look at the monthly chart. Now, my main focus is the higher time frame and how it impacts the lower time frame. Well, what's happening here on the monthly chart? Well, we had a pullback and a measured move. Okay, so that's interesting. If I tighten that up, so we hit a measured move target last week. Okay, so I'm going to write that. I can also see we're testing a breakout point. So we break out of this range and we come back and test. Are there any other measured moves here? Well, if a trader bought that bar, they got 1-to-1 there. So if they bought the close, okay, so there's another measured move target up there for 1-to-1. Okay, so we've got a couple of targets up here. So buying here, buying there. So there's been a couple of reasons to take profits at these highs. You bought above that bar. Okay, so that probably not. That's a bit high. What about half bar? Okay, so that's done on monthly to weekly. Let's go down to the weekly daily. So on the weekly chart, what did I think was interesting? Well, up here, we've got a breakout point. So we broke out of this range here and we came back to test. And we can see during the week, that was probably a source of a lot of losses for traders because it was a wedge bottom. It looked very bearish, but it just didn't break through. I thought it was also, this was a buy signal at a new high, but it's got a tail. So I don't really want to buy above. So it's either a buy the close or buy a 50% pullback. And the 50% pullback is where we reversed last week. I can also see that there's a micro gap here. You can see there's a gap between this inside bar, 1, 2, and then the third bar here. And we reach 50% of that gap. So they're the three things that were interesting on the weekly chart that impacted the daily chart. So now I'm going to switch to the daily and then the 60-minute chart. Now you notice the difference between these two is much more than 2 or 3, but I don't usually use the timeframes in between 1 hour and the 24-hour chart, but it's still going to work. The reason I've used the overnight instead of the RTH is so there are less gaps. It'll be a bit easier for everyone to follow. Okay, so we can still see that breakout point from before. What else can we see? We've got this big gap that did not close. Well, I can also see this is a channel. So we had a bull channel. We broke below and we tested the midpoint up there, or at least tested where we broke out of that channel. The channel is probably not quite correct. It's probably more like this. What else? I can see wedge bottom to the moving average. I can also see a test of the daily moving average looking for a buy signal. There's a lot of different price action from the 24-hour chart to the 60-minute chart. So we're testing this big breakout point on the daily. We had this big body gap here. We didn't end up closing. It was a bull channel. We kind of broke below it. We had a little micro wedge bottom here, 3 pushes down to the moving average, and we're in a bull channel. Let's go down another time frame. I'll switch it back to RTH. Okay, so what do I see? Well, I see this was some kind of channel that we broke out of. That's probably the lower high, and then we probably had some kind of measured move down. So now that's making sense. We've got a bull channel bear breakout testing the midpoint. We broke below a higher low and measured move down. Then we've got a bear channel, and then we repeated that behavior. Basically a wedge, 1, 2, 3, broke out, pull back, and now we've got a buy signal. Now we're back to the 15-minute and the 5-minute. And so now I'm looking at the last day or two of price action, but from the perspective of the 15-minute chart. And now because we've gone from monthly to weekly, daily, 60-minute and down, you can see I've already got all that knowledge. We broke above breakout points. We pulled back to close gaps. There was a bull channel that broke down, kind of forming a higher time frame wedge. It's basically a pullback on a higher time frame. And we're going to see how important this understanding was coming into the last couple of days of the week. So let's take a look. So I got rid of all the charts before. You can see we've still got some kind of a bear channel. We've had a really strong bull breakout. I highly recommend you draw a big green box there. And you can see all of this was a pullback to a breakout point. Exactly the same pattern from the higher time frame. So the market's fractal. What it's doing on the monthly, weekly, the weekly, daily, the daily 60, the 60, 15 is the same as the 15, 5. That's what's awesome about price action. Once you understand how to trade one pattern, you can trade it on any time frame. And if you keep zooming into that pattern, you're going to find the same thing. So if you correct your technique to trade it time right, you now know what you need to repeat, and you now know what failure looks like. So coming into the session, I was still short here, and I sold again on a lower time frame here, but I bought here and here. Now that's not magic. I know this is a bull breakout on the open. I don't want to buy 35 points above the open when we're going sideways. Here's a sell signal bar. May as well sell below. Consecutive bear bars closing on their lows and a bull doji. Well, you need to be selling probably a breakout point, selling somewhere above there. Get short. That was also a great trade. Then we had 3 legs down, and I'm right in the location I'm expecting a pullback, and we had a buy signal. So I bought above it. Worked out for 10 points. Happy days. Then it came back down, and we formed another buy signal there. And there was another long trade there. Now, you could have held it for a swing, or you can scalp out and look for another buy signal. Did you buy there? It's pretty small. Did you buy there? Well, it didn't really matter. Anytime in that hour that you took those buy signals, they were all good. So my start of the week was kind of just average trading for me. But my last couple of days of trading were really, really good. And when I reflected on that this morning, I realized that because I practice this drill all the time, the more information I have coming into the session, the better that session is. The more patient I am, the more ability I have to hold swings, the more able I am to switch when the low probability thing happens. If on Friday that wedge bottom formed and failed, well, then what happens? If it's not a breakout pullback from a wedge, well, that's probably just going to turn into a trading range. And that means there's probably 30 to 40 points below that. And we might just bear channel our way down to it. So even if you take a loss or two at the start of the day, now you're more familiar with the broader pattern and what's going to happen. If it was going to be a wedge, it would work, but it didn't. If it was a strong breakout with follow through, it would have got follow through, but it didn't. And I think this is a really useful drill for you to practice. Hey, well, thanks very much for watching. So this was the second video in a series about higher time frame and lower time frame. If you haven't seen the first video, I highly recommend you watch that one as well. And definitely I would practice this every day. My name's Tim Fairweather from Zen Trading Tech.